Welcome to the Generational Investors Podcast, where we explore the timeless principles of building lasting wealth. Today, here is going to be our introduction podcast. I'm your host, John Woodard III, accompanied by my father, John Woodard, and we're here representing Woodard Company Asset Management Group. So today's podcast is going to be pertaining around the idea of really who we are, why we started out, and what this podcast is going to entail here. First, I'll let my father, John Woodard, give himself a quick introduction of who he is and just a brief history of what Woodard Company is.
I started in the investment business in the 1970s. I've done this for about 47 years. I started with a brokerage firm called E.F. Hutton, which was one of the top Wall Street firms at the time. And I became, there's an inherent conflict of interest with commission brokerage. So after a period of time, I tried to find another way to do the business. Eventually, and there were a lot of iterations of that, but eventually in 1985, I decided to become strictly licensed through the U.S. Securities and Exchange Commission as a registered investment advisor. And we were licensed as Woodard Company Asset Management Group. We have no other, we're not FINRA licensed. We don't do any commission business, any brokerage, anything of that nature. We are fee-only investment portfolio managers. Consequently, we are strictly fiduciaries. We act strictly on behalf of our clients. And to my knowledge, we have no conflicts of interest whatsoever. The client's interest is our interest. The better we do for the client, the better we do for ourselves. We custody with the Fidelity Investments. Securities Exchange Commission requires use of a third-party custodian to hold assets. So this came about because in the 1960s, a guy named Robert Vesco stole $20 million in a mutual fund and fled the country, brought about the Investment Advisors Act of '73. And so all registered investment advisors are required to use third-party custodian. So as an interesting aside, if you look at Fidelity Investments mutual funds, you would find they're custodied by Harris Trust out of Chicago. So all investment advisors, so client assets are held by third parties, and for assurance, obviously there's no assurance against market risk, but other than that, it's Fidelity's unlimited on their insurance. We are strictly fee-only asset management firm. We manage a stock portfolio called Market Leaders. We also do, which has been very successful over the years. We also do a portfolio called we call it tactical asset allocation, which we utilized initially when efficient frontier theory came out in 1990, Nobel Prize winning by Markowitz, that showed optimal asset class allocations. We began managing money with that using institutional class shares of no-load funds in each respective asset class as suggested by the portfolio theory. And so those are the two primary methodologies we've used over the years to handle client portfolio management. But we also do now financial planning. There's, of course, no charge for our clients to help them have a roadmap for their finances, their lifestyle, and we consult regularly for any number of issues with our clients in regards to their investment portfolios.
That's a great answer.
It's a long one, wasn't it?
It was long. That's one thing this podcast is going to be doing a deep dive into some of the topics mentioned there, such as the efficient frontier theory and what it really means to be a fiduciary and many other things. How many assets does Woodard Company now have under management?
Our AUM is approaching $1.2 billion. We actually need to run the numbers again. But we've obviously grown a lot over the years. Since as of March of this year, it was Woodard Company established 40 years ago.
That's wonderful. And so, getting more into that, the podcast here will feature many different guests, and one consistent guest will be yourself and well me as the host, but just to go through and do weekly or bi-weekly analysis of what's been going on in the markets, whether that may be something to do as with recently in this year, what happened with tariffs and the market reaction to that, and as of recently, the different GDP number coming in, or as well as the job number reports and a few other issues that might come into principle.
And we also could have some tips like year end. We obviously we're not tax accountants, but we can harvest tax losses for our clients, and we can consult with you because it is coming up on year end. There are timely things to do, things you may want to consider beginning of the year. Also, this is a great time of year to look at the stocks that have been beat down. Companies with potential opportunity quite often get oversold during the tax selling period at year end as people go to harvest tax losses. And it gives some good opportunities to look for bargains in stocks to buy.
Good. And sadly, we're not able to recommend stocks specifically for SEC regulation purposes, but
On air,
we will do our best to guide our views through the markets.
And let me say this, it's just that it may or may not be appropriate to make general recommendations just to throw them out there. And that's what the SEC, they want you to know your client and know the client's objectives, needs, resources, and so forth, and invest accordingly with that. And so we're probably not going to throw out a lot of ideas here. And to give you a differentiation slightly, since we manage assets, we are regulated by the Securities and Exchange Commission. But if, let's say, for example, you may say, well, these other guys do it. Well, they probably have a newsletter, and under the newsletter, their First Amendment protected right to free speech. If they don't manage money, they can take call. You'll see like Kramer on CNBC. He'll take a lot of calls and say, yeah, I like that. I don't like that. It's opinion, it's analytical opinion, and we have our opinions as well. But to make blanket recommendations is not appropriate, and it's not appreciated by the Securities and Exchange Commission.
Yes, well, thank you. And just to round things up, I'll give a quick introduction of myself as well, just to get my credentials. I graduated from Virginia Tech back in December of 2023. I graduated cum laude, and shortly after, I did some work for Fidelity under their defined benefits division, and I worked for them to get under them and got my SIE, which is the Securities Industries Essentials exam. From there, I joined the family business of Woodard Company, and since then I've been working with the firm for a little over a year and a half now. I'm currently working to get my Certified Financial Planner, CFP, and after that I get to do the lovely trek of the CFA. And in my free time, if I'm not looking at stocks or reading the news, I like to train for triathlons. I have an Ironman coming up here in May of 2026, as well as I like to run as well. So I have a marathon in Wilmington coming in February.
I have a question. So you went to Virginia Tech. What did you study there? You failed to mention that.
I studied finance.
Finance,
yes, that's a minor in economics.
Minor in economics. Well, that's good preparation.
It applied a little bit to here, but I must say that from what I learned there versus what I've learned here, it's about no comparison. I had a few good classes, I learned a few good terms, but
hands-on practical experience. It's good to have the background and the training that you can get. The understanding of analysis of businesses. So forth, but there's nothing like experience.
Hands-on experience.
You get wisdom from experience.
Yes. And working with individuals that have spent years and years in the business, yourself included. And we have 3 other advisors that work with us, and they all have a combined over
50 years.
50
and
years.
if you add my 47 years, and yours. We're right at 100 years of experience. Yeah,
that's quite.
And the way you take Joan, handles our 401k plans and so forth. Now you're like a
CPA,
130. Yeah, and she's a CPA as well. So
it's quite something.
Yeah.
Anyways, to round up this podcast for this week, we thank you all for listening in. And just remember that generational investing is about perspective. It's looking beyond the noise to have generational wealth. And as always, we like to tell you our motto at Woodard Company: always buy quality and diversify. Thank you. The information provided in this podcast is for educational and informational purposes only and does not constitute investment advice, a recommendation to buy or sell securities, or an offer or solicitation of advisory services. It does not take into account your individual financial situation, objectives, or needs. Investments involves risks, including the potential loss of principal, and past performance is no guarantee of future results. Woodard Company Asset Management Group is a registered investment advisor with the SEC. Please consult your financial advisor or tax professional before making any investment decisions.